Level 1, you stare at the amount you owe line on your 1040 form, while the fluorescent light in your kitchen hums at 60 Hz. At level 8, your effective tax rate is lower than the person who cleans your office windows. You log into TurboTax. You upload a PDF of your W-2 from a mid-sized marketing firm in Columbus. The screen shows a gross income of $72,000. Will the standard deduction cover your credit card interest? The IRS enforcement budget for 2026 fell below $5 billion for the first time in decades, an 8% cut that many said would be felt. You click the button for the standard deduction of $15,000. You wait for the progress bar to calculate your refund. The number is $200. You submit the electronic filing to the IRS. You tell yourself that the software is a shield against the audit lottery, and the standard deduction is a fair trade for a simple life. Level 2. By morning, you open an Excel sheet labeled Expenses 2026. You log a $1,400 MacBook Pro and a $60 internet bill. You claim 15% of your apartment as an office. The GAO reports sole proprietors misreport 43% of income. You wire the quarterly 15.3% self-employment tax to the Treasury. You store receipts in a shoebox. You tell yourself every meal is networking and the shoebox is a legal defense fund. Level 3. You register a New York S-corporation. You set your salary at $50,000. You take the remaining $80,000 as a shareholder distribution. S-corporations do not pay federal corporate income tax. You pay no payroll tax on that distribution. You sign the K-1 at your CPA's office. You lease a Lexus RX. You tell yourself a reasonable salary is a subjective term and the Lexus is a necessary business asset. Level 4. Next morning, you file articles of incorporation in Dover, Delaware. You pay the $300 annual franchise tax. You move the intellectual property of your software firm to this entity. Is this how the game is played? Your California office pays a licensing fee matching your quarterly profit. Delaware collects between $1.8 and $1.9 billion in franchise taxes and related fees each year, roughly a quarter of the state's entire general fund. You sign the intercompany agreement. You tell yourself that the tax code is a menu, not a mandate. Level 5, you enter a Chelsea gallery. You buy an oil painting for $50,000. You wait 3 years. An appraiser values the canvas at $400,000 based on auction records. The IRS Art Advisory Panel reviewed 195 items in its most recent fiscal year and accepted the panel's recommendations in full on fewer than 2/3 of cases. You donate the work to the Metropolitan Museum of Art. You claim the $400,000 deduction on your 1040. Your tax liability reaches zero. You tell yourself that the market, not you, determined the value. Level 6, you transfer $2 million in appreciated Tesla stock to your family foundation. You avoid the 20% capital gains tax. You appoint your daughter executive director at a $120,000 salary. You host a board meeting in Aspen. The foundation pays travel expenses. Private foundations must distribute 5% of asset value annually. Administrative costs count toward this distribution. You sign the Form 990 PF. You adjust your watch. Level 7, you wire $50 million into a Nevada Spendthrift trust. You use the step transaction doctrine before the liquidity event. Nevada revised statutes allow these trusts to last 365 years. You borrow $5 million from your holding company. The loan uses the 4.5% applicable federal rate. The IRS excludes loan proceeds from gross income. You register a 100-foot yacht under an LLC. You pour a glass of water. Level 8. You sit in a leather chair in a Singapore high-rise. You review the structure of a Cayman Islands exempted company. The entity holds the patents for your global shipping fleet. You pay 0% corporate tax in the Caymans. The Cayman Islands has no corporate capital gains or personal income tax. There are more registered companies in the territory than there are people. You use a Malta citizenship by investment passport to travel to London. You sign the wire transfer for $400 million. The transaction clears through the SWIFT network in 9 seconds. You pick up the pen. Level 9. A young man in a polyester suit enters the lobby of the Singapore Tower. He carries a leather briefcase and a printed resume. He checks his reflection in the mirrored wall of the elevator. Does he realize the tax code is the only law that matters? He does not. You stand by the floor-to-ceiling window on the 54th floor. You do not look at the elevator doors when they open. The young man speaks to the receptionist. He asks for the person in charge of accounting. The architecture remains standing long after the architect leaves the room.